Hi, everybody. Very, very happy to have this panel about Hong Kong with amazing people that I personally know, and you guys have amazing leadership, and you're contributing so much to the blockchain and crypto ecosystem over there. And I'll let Gilat start, and everybody, if you can just, first tell us about yourself, tell us about your organization, then we'll dive into all the hot topics of today.
Thank you, Nir. So I'm Gilat Alon Shemesh, and I'm literally trying to bridge Israel and Asia. And one of the topics that I focus is crypto and blockchain. And I'm very honored to have Lucy Gazmararian here with us from Broken Bay Capital, and Mushir, founder of FinStep Asia, to talk about Hong Kong crypto and how it became such a sizzling place for exchanges, founders, and crypto companies. Lucy, ladies first.
Yeah.
Could you please introduce yourself and say here already know.
Great. Yeah. So Lucy Gazmararian, I've launched a crypto venture capital fund based here in Hong Kong, early stage, and all very exciting.
Share.
Thanks. I run FinStep Asia. We're a digital advisory where we work with fintech and blockchain scale-ups who are looking to go cross-border in Asia. We also provide research and content development for, like white paper writing for blockchain firms.
Thank you. So when Nir reached out, I told him, Hong Kong and crypto is a must panel on Coination Summit, and we need to bring, the best experts about Hong Kong and crypto space. So I'm very happy you both joined. So just to give some context, Hong Kong crypto space is sizzling. Just to name some, to give us context, we have Tether, we have FTX, we have Crypto.com, we have Block One, all raised a lot of money, all are operating from the city, and all made Hong Kong their home, their headquarters. And those entities were nurtured by Facebook and PayPal investors. So it's not, an accidental. Really, people came here and founded those exchanges and companies. And also very interesting information about Hong Kong is PwC survey found that most common location for crypto hedge fund manager is United States, United Kingdom, and Hong Kong third place. So it's very interesting how all this Hong Kong finance crypto triangle came to be. And I would like to ask you, Lucy, to start and tell us, you founded now a crypto venture capital in Hong Kong. So I guess you have a lot of answers why this is the place to be now.
Yeah, I mean, there are so many of the crypto OGs in Hong Kong. So as you said, you named all the sort of really founding fathers and mothers, I should say, of crypto. So Crypto.com, FTX, Block One, BitMEX. And I think what Hong Kong lends itself towards is it's such an entrepreneurial city. It's a fantastic place to do business. It's very much a village, and it's really, in the sense that it's a village that you can meet people, you can drive businesses forward very quickly. There's a lot of actually support here from Invest Hong Kong, which is the FDI arm of the Hong Kong government. And it's really attracted a lot of the original players. I think it has a lot to do with the proximity to China. China was absolutely an early adopter to all this technology. I mean, the first crackdown of Bitcoin, which led to the crypto winter in 2018, that was in large part with the PBOC banning Bitcoin back in 2017. It had a huge impact on the market because it's really early adopters in this part of the world. And it's a very mobile first world. Everybody's very used to smartphones. It's not the land of credit cards like we have in the US. China and Asia to a large degree leapfrogged the credit. So the step from payments on your mobile to cryptocurrencies is actually, it's a pretty small step. And so, there's just a ton of innovation over here. And it remains regardless, because as we all know, crypto is not limited to Bitcoin. It's a technology which is transforming many different areas of our financial and social lives. And, the story continues in Hong Kong.
Mushir would love to hear your take about why so many crypto enthusiasts have founded their entities and companies headquarters business here in Hong Kong.
Lucy hit the nail on the head when she spoke about how enabling the Hong Kong ecosystem is, right? One of the main reasons you have seen, when you look at US, UK, and Hong Kong, these are major financial centers, right? So there's a lot of capital here, and with the given nature of crypto having been, actively being sold or transactions taking place in Hong Kong for a number of years, right? So, for example, when I moved to Hong Kong, roughly 7 years ago. One of my first experiences was looking at a Bitcoin ATM, and this is 2014, right? Close to a university, much before anybody were talking about the Bitcoin boom and ICOs, etc. So inherently, the element of usage of Bitcoin, the value of Bitcoin in the ecosystem has been there for a while, right? Secondly, the entrepreneurs, like Lucy was mentioning, the ones who have built these large exchanges, have all had an experience working with in the financial services industry. If you take the founders of most of the major exchanges and OTC platforms who are headquartered in Hong Kong, they have that financial services experience, and they have had that support in terms of the regulatory clarity that Hong Kong has been able to provide. Right? Quite often we look at Hong Kong and you may say there isn't, regulatory enablement may not have been clear, say 5-6 years ago. But when it came to crypto, the SFC in particular, I think, took the lead. First, they clearly classified how they look at security tokens versus, say, payments or utility tokens. So allowing for listing of utility and payment tokens without, penalizing the other exchanges. So it was an enabler. Second, when ICOs were at their peak, they didn't outright ban it. They went with the approach of investor education so that people understand it, and they allowed for whatever's legal under security laws to function, right? Which is and both Lucy and I have strong affiliation with the industry in terms of the ecosystem, right? I'm one of the co-founders of the association, and Lucy is now on the board of the association, and we regularly work with the regulators. And when you talk to the policymakers, you quite often have the sense of they're looking to learn and educate themselves both from a technology perspective as well as understanding business models, right? So that enablement, I think, has been very important. Hong Kong was one of the first jurisdictions globally to come out with a license for crypto funds investment, right? How much, say, over 10% of holdings needs to be reported. All these are enabling elements, right? So that helps companies set up here. And also the other major reason is mainland China. You've had significant crypto ownership in mainland China. And when the crackdown happened, quite a few of them moved their headquarters to Hong Kong, as well as capital flow in terms of crypto to Hong Kong. So that's another reason that you can look at.
Super interesting, and you can see like history is being made in 3 years when once it was made in decades in the financial world. It's amazing. So you've touched upon the next topic that I would like to ask you about, the regulation. So as you said, Hong Kong has one of the most advanced approaches towards crypto funds in the world. As you said, about the 10% portfolio approved and so forth. And you have the opt-in and now for licensing the SFC, but this may change. We were noticed in May that they will have to make exchanges to be licensed, and also will be only professional investor will be allowed to trade crypto. So how do you see these changes, opportunity versus challenge? In my opinion, there's a lot of opportunity can be done when regulation comes in for a lot of those solutions and products for regulations in crypto. And what are the challenges for the current exchanges and companies that are operating in Hong Kong? Lucy?
Yeah, I mean, it wasn't totally surprising that this came out. So this came out from the FSTB, and it's really sort of responding to FATF's goal to sort of get everybody in line with AML and CFT regulations. So, crypto and crypto exchanges and the movement of these new types of digital assets, and making sure that money laundering, doesn't use those rails versus the traditional banking system. Now, the travel rule was already, I think it was announced, Mashir, in 2020 and discussed in a lot of the exchanges all around the world. So they're not a rulemaking body, but they basically give very strong encouragement to regulators in all the different nations around the world to implement certain policies to make sure that the right KYC information is collected, the right information of anyone sending something or receiving something, any information that travels with the trade is recorded and reported, for example, if it goes over a certain level. So this was already coming, but the extension that we had recently was that, exactly as you say, it's now no longer an opt-in. It's everybody has to, if they want to, basically provide retail services in crypto to Hong Kong residents, they have to apply for a license. The impact is slightly concerning on one hand, because a lot of the crypto businesses, the biggest part of their clients is retail, revenue from retail. Retail is very active in digital asset markets in Hong Kong. It's great trading mentality here. And we would have perhaps welcomed investor protection for retail as well. I think everybody is on board for better clarity, better regulation, applying all the anti-money laundering rules. I think we're all in agreement that that is the right thing to do, but it's how do you do that? And so this new announcement is in order to apply for a license, once you get a license, the first phase is that you can no longer service retail in Hong Kong. So any of the exchanges that are already set up, which now have to apply for the license because it's no longer opt-in, are faced with basically closing the accounts and closing the business line that's attached to retail in Hong Kong. So they say that it's a phased approach. So this is just to make sure that all the checks and balances are in line, that all the exchanges adhere to very high standards, the same standards actually that apply to other financial services companies. So it's a very high bar, which takes a lot of investment in compliance teams and responsible officers and all those things that we have in traditional finance. And it's just a much bigger task, but hurdle for cryptocurrency businesses to now adhere to all of these international standards and now Hong Kong's regulatory framework. Hopefully we are going to see this evolve into, once these exchanges have all met certain standards, then they can roll out the service offering to retail. But in the meantime, there's a concern that retail is not going to stop trading cryptocurrency in the short term. They're just going to be driven offshore. They're going to go to offshore exchanges, maybe go to sort of shady underground peer-to-peer exchanges. We've heard of all the muggings in various places in Hong Kong with people taking suitcases of cash and trying to exchange Bitcoin and instead being literally robbed at knife point. So, we want to avoid all these things, and that can be the secondary effect of all these good intentions from the regulators. Not many people trading crypto now reach the professional investor or criteria. You have to have $1 million in liquid capital, and that excludes any money you have in crypto. So it has to be in stocks and bonds, etc. So, we'll see where this takes us. They haven't announced yet when they're going to be implementing this, but we're expecting it to come out very soon and come into force. There'll be a sort of grace period of 6 months for everyone to sort of get in line. And then we're going to see what the impact is on the crypto businesses and the exchanges specifically in Hong Kong.
Thank you, Lucy. Yes, it seems like there's a lot that is going to be very, very soon with the regulations. But again, Mushir, as a consulting company and supports, what are the opportunities side for the adoptions of those regulations and governance and compliance that can be kind of implemented for the entities, the crypto entities in Hong Kong? Do you see a crossover there?
Right. So there are two elements to it, and Lucy has spoken quite lucidly about the retail space, right? And that is an important element. But one of the transitions you're now seeing globally, not just in Hong Kong, is the active participation and interest from institutional clients, right, and investors. Now, Hong Kong is keeping in mind we do have a large retail participation, but also Hong Kong is home to some of the largest number of ultra high net worth and high net worth individuals in the world, right? By US dollar value as well. Top three comfortably in most metrics. So there is that opportunity that you will still have the bigger guns still involved. While on the institutional side, I think there is going to be more growth, right? There's more enablement now happening. The more regulations that come in, the more safer institutional clients feel. And you now have the likes of DBS, Standard Chartered, and a bunch of others offering cryptocurrency and digital asset investment opportunities for their clients, right? Trading and investment opportunities. You have BlackRock and others also looking to get an exposure for their clients in the space. So what that ultimately means is that it's getting more institutionalized, right? Which means there's more structure that you need to have. And hence you can have a variety of different fintechs who can support this. Of course, one is looking at the RegTech space, right? So ensuring compliance, the travel rule is not going to be easy to implement. Quite a few, if not all of the major exchanges now have much more robust KYC and onboarding rules than they did before. They probably still need to increase that, right? Reporting norms are only going to get tougher for them. So that's going to be another element for them to look at. Secondly, I'm looking at data analytics. I think that's another space in the crypto world, which is continuing to grow. Risk management for funds, for investment professionals as well. That's going to be like, how do you incorporate and build portfolios which have a crypto element to it, right? So for the diversity, but for companies to be able to see that, I think that's another key space where fintech can be very useful for the crypto industry.
That's great pointers for companies who are going to watch this panel and kind of want to see where their market, the space, their clients is in Hong Kong. And I think that's a great kind of future looking forward for the companies that will grow here in the crypto space, that will be a service provider, product providers. And beautifully, for my next point is how are we involving those incumbents in the financials? So I read the Charles Dorsey Block-Kong book, and one of the founders said, and I'm quoting, that too much innovation stays within the crypto system, and it's a shame it doesn't go beyond that faster. That was Lunesu from Enuma. And it really touched the core, because we have so many banks here and so many insurance and 8 virtual banks and above 800 firms of wealth and asset management, and they understand the wave of crypto, but they're hesitating and they say, okay, we'll open a crypto desk. Okay, we'll invest in a fund, but they're not there yet adopting this wave, this sizzling, zeitgeist. And I think one of the great things that we may see in the next couple of years is kind of the crossover between this space of crypto, the bad boy and girl of the financial world coming into those incumbents. And I would like to ask you, Mishir, what do you see? What are the trends that are going? Who's going to adopt first, and what are those adoptions going to look like in those incumbents of the financial space in Hong Kong, which is one of the biggest in the world?
You brought in Block-Kong, written by James de Blasio and Charles Dorsey. Highly recommended book for anybody who hasn't yet purchased it. It covers the Hong Kong crypto ecosystem and talks to a lot of the different founders and people involved in the space. However, I'll just make a caveat. I think the book came out 6 months to 9 months ago, right? And a lot has changed. The crypto world operates at lightning speed in some senses as compared to the banking world, and that's one of the challenges that you have with institutions and banks, because they're regulated entities, and there is a certain they have a limitation on how fast they can react because of compliance requirements, because of internal processes, etc. Right? So expecting banks to jump on board at the same speed and agility that fintechs or crypto companies have is actually not a realistic expectation, right? If banks were as quick and agile, we wouldn't have fintech companies building what they're building, right? Let's be very honest about it. So coming to this element, I feel 2 years ago, 3 years ago, most of the banks were very, still looking at the space skeptically, or at least publicly were very skeptical about it or negative about it. You have the famous Jamie Dimon statement that was there about crypto, but now you have from JP Morgan all the way to Standard Chartered, DBS, and others offering for their clients an opportunity to participate in the crypto ecosystem, right? From investing, as I said, or funds, or to a certain extent, some of the large financial institutions are also investing in crypto companies, right? So for example, when you mentioned Charles Dorsey, he is the managing director for Consensus in APAC, right? And JP Morgan has invested venture capital into Consensus for an enterprise blockchain company based on Ethereum. So you can see that there is that exposure that's happening. Are everybody jumping on board? No, I think some of the retail banks in particular are still showing skepticism. They're not, in certain cases, also servicing bank accounts for crypto companies. You had some of the British banks do this as well. But overall, I think there's more acceptance. Once they are regulated entities, there's going to be more opportunity. So there is a divide, I would say, in the financial institutions of one, the investment banking or the investment trading parts of the business versus the retail and the consumer part of the business, right? The trading investment part of the business understands that their clients are demanding access to crypto, right? And they want to know, and because it's now regulated, they want that access and they want that exposure in their portfolio. While on the consumer and retail side, the banks have faced hundreds of billions of dollars of fines for AML, CFT, and a variety of other compliance issues over the last decade. And so they're very wary about bringing in any risk element, right? Any normal startup was a risk for them, but when you bring in crypto, it's an added heightened risk for certain cases where people may have gotten onto exchanges based on anonymous or very basic KYC, right? So those are some challenges that the retail banks are facing. But on the investment bank, I definitely feel everybody's going to get into it or are going to be left behind quite badly.
Lucy, what do you see? What do you hear from the incumbents?
Yeah, I mean, I actually think, I think the regulation has stopped them. I mean, to be fair, DeFi really only took off last summer, if we're going to talk about DeFi. And yet we're beginning to see institutions look to access liquidity pools and the new way of DeFi thinking, where CeFi meets DeFi, that's already happening. So that, I think, is actually very fast. And I think the reason it's very fast is because from a mindset perspective, they've been gearing up for this for years. It's not that there isn't interest at these financial institutions, it's the regulation that stops them from actually deploying resources and people into the area for the reasons that Mashir outlined. They cannot keep getting hit with all these fines, endless fines since the GFC in 2008. But that's not to say they haven't been watching it, monitoring it. And it's interesting to see all the innovation that is happening and the way the different banks are sort of handling it. You've got Goldman sort of trading futures, sticking to the financial markets infrastructure, but we had to wait for Bitcoin futures to get traded and CME to offer these products before the banks can move in. So there's sort of all these steps that need to happen, but they're very aware that the appetite's there. And I think, DeFi has been a sandbox of innovation. I mean, last summer, it was sort of the Wild West. And now it's actually a lot of the DeFi protocols are having KYC applied to them. The blockchain forensics firms can track transactions. So it's not just KYC, but it's KYT, because as we know, everything on a blockchain is very visible. It's very transparent. So if you've got that KYC and that KYT, that hugely successful element of DeFi, which is, crowdsourcing liquidity from the world, can really be quite efficiently harnessed by financial institutions going forward. So I actually think we're at a moment where it's going to snowball in certain respects for financial institutions and crypto to come together in a regulatory compliant way. So I'm very bullish for the next 6 months.
Yes, if you allow me to say, we have lots of regulators from many countries. We are the Coin Nation Summit. They are watching you right now from all over the world. This is why we launched this summit, because of this revolution that you're seeing, and it's all over the world. And that's, we had 4 FinTech Nations Summit with Munshir here in the last year. Was all about learning from the regulators and institutions from all over the world to get the best fintechs into one platform. And now we're calling this Coin Nations, because we're seeing that there is something new here. And I'm sure that this panel is super relevant, and you know, that's the point, to educate, to learn, to bring everybody on the same, you know, platform. So I think that what you said, and the best practices from each country and company is super important to what we are doing here. So yeah, overall, you know, I'm just, you know, listening here, and there's so much to learn. I'm so happy that you are here on the summit. And by the way, if people have questions and they want to, you know, follow you on get the last information about Hong Kong and stuff that you do, maybe Gilad and all of you can tell us where is the best place to follow all these updates, and you, of course.
I'll kick off. So yeah, for me, LinkedIn is my CFI meets DeFi spot. Yeah, so I would say find me on LinkedIn.
You're on mute.
Sorry, 2 years and I haven't learned yet.
It's humane, very humane.
Right. Thank you. I was going to say, likewise, I think LinkedIn is a good place to reach out. I also tweet. So if you want to follow, you know, on Twitter, I'm FinTech Ballerina, considering the amount of pivots we have to take in FinTech. While on LinkedIn, you can search me with my name and my company name. Yeah.
LinkedIn is the place. It's a great platform, and I think there's a lot of learning of what's going in Hong Kong in the crypto space. I think it's kind of looking in the future for many other countries because of the massive financial incumbents that are here, and so many crypto enthusiasts that have founded here. And it's amazing. I've learned a lot. And thank you very much both for your time and for your insights and for your wisdom and patience with my questions. It's much appreciated, and hope to have another session in 6 months or a year and see what has happened. As someone tweeted today, crypto is so volatile that what was relevant yesterday is not relevant anymore, and then you start all over from scratch. So I think we'll have a lot of it's going to be a nice ride in Hong Kong, in crypto and everywhere.
Yes, stay around, and yes, I agree. It won't be the last. Happy to have you. I know all of you are super busy, and again, different time zones, and you guys are living all over. But yeah, this is very important, and let's continue this conversation and connect, collaborate, and stay here if people want to connect with you on the summit.
Great, thank you so much. Great to be here.
Thank you very much.